Hello everyone, Charlie here, and in this presentation I'm going to cover a very simple Forex strategy that works very well on the daily time frame using the MACD as your indicator, I guess, your main indicator for entry. Okay, there's a couple other things that need to happen during this setup, but it has proven to be a very solid strategy that I highly recommend. Now, like I said, this is for the Forex trading, and I like it on the daily time frame. Reason being is the longer the time frames, the higher pit potential you have. Obviously, you can lose more, but I will go over how to set proper stop losses for this, and how to trade it properly. Okay, if you are a scalper, intraday trader, any of that, you can do this on lower time frames, but it will not be as accurate. Okay, so I really highly recommend trading it on the daily time frame. These are long-term signals. They last days to months in duration. Okay, so right now I have the euro dollar or euro USD chart up. Okay, now as you can see, there's some little arrows on here. This indicator does not repaint. Okay, we also have, the 200 simple moving average. Okay, and we have the MACD crossover indicator. Okay, so these three indicators together, along with looking at the candles for when the trade sets up, will determine your entry. Okay, so these indicators, if we right click and go to indicators list, we have the MACD two lines change color, which is this indicator down here. We have the MACD crossover alert indicator, which are these little arrows. So every time there's a crossover is when these arrows paint. Okay, and like I said, they do not repaint. And then we have a moving average, which is set to, I want simple, and we have period 200. I choose white, but you can put whatever color you want, and I choose the second thickness there so you can see it a little bit clearer. Obviously, that's just a personal preference. Okay, those are the only three indicators. So the cool thing about these little arrows is they will send you a signal, okay, whenever the MACD crossover happens. Okay, and you can change these values in here, but I do have it set on both of these MACDs just to the 12, 26, and 9, which is standard MACD settings. Okay, so a few rules basically that we need to follow, and that is, one, we need to wait for an arrow to appear or a crossover to occur. Okay, the arrows just help make it a little clearer, and they, like I said, they send a signal for you, so it just makes trading a little bit easier, especially if you have multiple charts, up. Okay, so we wait for the arrow to appear. If price is above the 200 simple moving average, then we only enter long or buy positions. Okay, so only these green arrows. You ignore any short when price is above the 200 simple moving average. If price is below the 200 simple moving average, then we only take short positions or sell positions. Okay, that is rule 1 and 2, I guess, if you'd like to break it down to the simplest form. Okay, the third rule is when this occurs, okay, we wait for this candle to fully to finish fully, okay, to complete. And since it's a day in duration, you know, we wait till the end of the day. Each broker is a little bit different on time. Where you're located could also affect that. So I don't want to give a specific time because both of the MetaTrader 4s that I use are at different time frames. The final rule here is, let's say for this example here, price is below the 200 simple moving average. We had a short signal. We wait for that full candle to develop, okay? And then we wait for the next candle, okay? So you have one more day, which is kind of nice, especially if you aren't at your computer, okay? Now, if that second candle, okay, closes below the previous candle, okay, for a short, then we go ahead and enter. If it closes above the height of the candle, then we avoid it and we wait for the next signal. Okay, so in this example here, here's where candle developed. We had our short signal. We have the next full day to wait. Okay, and then we see that it closed below, barely, but it did close below. Okay, then we enter a short. Okay, so we would enter, it would be right about there. It's after the full duration of this candle. All right, we would set our stop loss at previous resistance. Okay, so if there's a couple things that you can do. Okay, for the best accuracy, you're going to set it at that previous resistance for a short, or the previous support for a buy, okay, or a long. Now, you can set it, just because there's a wick here, you can set it slightly above that. That does increase your stop loss, okay? But with the market, how it spikes, things like that, you really, that's something you're going to have to go back and look at on the chart to determine what would be the best option for you. Or you could set it just above main resistance right there, okay? So, if you are normally a trader that trades lower time frames, this may not look like a large stop loss to you, but remember, this is the daily time frame, okay? So trade according to your account size. Always use proper risk management, all right? If there is a larger stop loss like this, you could avoid the trade, or just make sure, if you normally take your trades at $2 a pip, maybe for this one, because of the large stop loss, you take it at 50 cents a pip or $1 a pip, okay? That's something you'll want to calculate. But that is where you'd set your stop loss, there, or a little above that high of the candle wick, all right? And the best option for your take profits, all right, is A, open up multiple positions with multiple take profits, and on your, if you open, let's say you open 3 positions. Your position 1, roughly a 40 pip take profit, all right? your best accuracy would be to set it at previous support levels for a short, okay? So here's your entry right here. I'm going to change actually the color of this line. So entry yellow. Now your take profits, you would want to set to previous support. So if we go back here, a lot of wicks hitting right around here. That would be my take profit 1. Okay. Your next take profit, actually that was pretty close, would be, again, previous support. That's what I find to be the best. You can do a risk to reward, like 1-to-1, 2-to-1, 3-to-1. I do cover that in a lot of my other videos. Or you can set, especially if you're new to trading and you don't really understand support and resistance, you could do a take profit 1 of 40 pips and then trail stop it. So keep moving your stop loss as it goes into profit, roughly every 20 to 40 pips. Okay, but I really, really highly recommend doing support and resistance. That is going to get you your best results for your take profits. Okay, now as you can see, well, actually that was really accurate. All 3 of those did get hit. That would be a movement. So 34 pips, 70 pips, 102 pips. So pretty decent move. Okay. If you used a trail stop, you would have moved that down. Let's say once it hit your take profit 1, you could close out one position right there. And then your other positions, you could just move that down. Okay, so move it to a break even, move the stop loss down to a break even, and then as it continued to go into profit, move that stop loss down, move that stop loss down, move that stop loss down. Okay, that is a good way to manually trail stop. There are trail stop EAs. There's one that we offer in Slick Trade, which is a really nice one. You have multiple options for the type of trail stop you want, and you can use the BEP or break-even profit. There's a lot of different options, but again, it depends on your trading style, depends on your trading knowledge, tolerance, all of that. Okay, but that is how I personally trade that. So let's look at a few more, and I'm going to change the color of this one. Let's do a deep pink. That's our stop loss. All right. So let's go back. So 200 simple moving average is up here. Here would be a short. Okay. Next candle. Close below the high of this. You could wait one more day. I personally would have waited one more day on this simply because look at this support level here. Price has been moving in between there. Okay, it's been hitting it multiple times. So here's our short signal. The next day, look at that. See that wick there? It's hitting right at that support level. So I would personally probably wait for that next candle to make sure that it continued to head down, because otherwise it could go into a period of consolidation and then kind of trap you in the trade, or just end up hitting your stop loss, and you could have avoided it by just waiting another day. Completely up to you. My personal preference would be just to wait. So you would have entered after this candle here. So waited for the second, not the first one after. And I would have set my stop loss. You can set it right above that wick high, or I probably would have set it just a little bit lower, right about there. Okay? Entry is the yellow line, and your take profits, let's see here, if we go back to, so previous support, I'd say right about there. See, those wicks are all kind of hitting right there. So that'd be take profit 1. Your take profit 2, I would set right around there. Again, that's where price is kind of hitting repeatedly. And I would set a take profit 3, probably right about there. Okay. Those are all pretty good support level, yeah, support levels. So entry, take profit 1, 2, and 3. And all 3 did get hit, okay? You can't take more than 3 positions, but that's just kind of how I do it, all right? Sometimes I'll open a 4th position and just kind of trail stop it, put a pretty high take profit initially on it, and then just manually trail stop, you know, because sometimes price will just continue and continue and continue, and it's nice to have, you know, one position that is gaining on all of that, okay? So, just a thought. So let's look for some long positions. I know price somewhere over here. Yeah, price crossed up above that 200 simple moving average. Oops, let's grab my take profit lines here so I don't lose them. All right. So we would have avoided this signal, obviously, because price was under. But then here, price is above. All right. Next candle, closed above. All right. So entry would be right about there. Let's see here. Stop loss. There's 2 different. Let me move this out of the way real quick. 2 different stop losses you could look at. I personally would have gone right about there. Okay, that's where most of those candles hit down. That's a good support level. Okay. You could do a little higher where they're all hitting right about here. But again, I personally, I would have done it down here just because of how heavy a support this is, okay? Obviously, neither one of them got hit, but it's just, it's just nice to have that extra, okay? If I decide to manually exit, then so be it, but that is what I recommend. So, entry, here, stop loss, down a little lower, and take profit 1. Let me zoom out for this. We want to look at previous resistance levels. Jeez. If we have a previous, here we go. All right. So, actually right about here would be a good take profit 1. That's where price hits a lot. You could bring it down just a little, right about there, but that's pretty good resistance level. This right here, kind of right in there, was a good resistance level. And this right here would be another good resistance level. Okay. Now here, actually, here's a really good example of having that 4th position. Okay. So, entry, your take profit levels. Now, if you happen to have a 4th position open, or even just, you know, one position that you are trail stopping the entire time, and just keeping it open, as you can see, take profit 1 got hit almost immediately, kind of right there. If you did it a little bit higher, then it, you know, you had to wait a little bit longer, but right there. Take profit 2 got hit here. So let's see here, that was on 5/17. So almost a month later, take profit 2 got hit. A couple days after that, take profit 3 got hit. Now, if you continued to trail stop, look at how much higher this would have gone. So if you only got take profit 1, that's a pretty nice move. All right, so 100 pips, 170 roughly, 250 pips roughly. But if you continue to trail stop it, let's say you got the max out of that trade. Actually, it just kind of continued quite a bit. But either way, 600 and some odd pips versus 250. Okay, so again, just a nice example of that. But if you use this method of trading with the MACD, right here we have another signal, long signal. Okay, so you could just pick up another position at that point. If some of if you already exited out of a couple there, and the next day, still long. All right, entry here. Couple days go against you, comes back up. Wait about a week, and then it starts to go into profit. A few more days, and heavy profit. Okay. So again, set your take profit levels up. I'm not going to zoom back out. I'm just trying to give you guys some examples and give you a nice visual of the strategy itself. Let's look at a couple more. Actually, I'm just going to go ahead and we'll delete these out. Let's just look at a few more examples here. So again, a long, next candle, closed above, entry for a long, beautiful. All right. Short, short, short. Here's an example of one to avoid. Here's your long. Next day's candle. Look at that. That's a doji, pin bar, whatever you want to call it, and it's got some heavy push to the downside. Okay, and it closed below the first candle entry there. Okay, so if you did happen to take it, then I mean it would have gone into profit eventually a little bit, but you could have avoided it just by seeing that candle, waiting for that next day's candle and just waiting. That's it. Sorry, words weren't coming. Here's another example. Long. Next day's candle closed way below. So just avoid that signal. Okay, so there's a few examples of long and short entries. I hope that this has been a decent explanation of a good way to use the MACD. Like I said, just remember daily time frame, and remember the rules. Wait for a signal from the MACD indicator there. If price is above the 200 simple moving average, or this white line here, if it is above it, you only take long positions. If it is below it, you only take short positions. Set your stop loss at previous support and resistance. Set your take profits at previous support and resistance. Use a trail stop to get the most out of your trades. Use multiple positions to get the most out of your trades. And always wait for that next candle. So you have your first candle that has the signal. You wait for that next candle and make sure that for a long it's closing above and for a short it's closing below. Okay, avoid those pin bars or doji bars. Okay, just be smart in your trading. Always use good risk management. Always trade according to your account size, and this should be a very beneficial strategy to add to your trading if you like longer term trades. Like I said, you can do it on shorter term time frames, but I don't recommend it. Okay, or if you do, make sure you use really good stop losses, take profits. Watch positions closely. Okay, trade smart. If you're a Slick Trade member, then you have these indicators in your file pack. If you are not, feel free to sign up for the free education portal, and once you do that, we can send you these indicators for free. So just shoot support a message, and after you've signed up for that free education, and that's about it. You guys have a good one, and good luck in all of your trading endeavors.